Hello, and welcome to Trendonomics. Today we're tackling an issue that's already impacting global markets and will soon reshape your financial reality. These issues are, of course, America's sweeping new tariff policies. In the past week alone, markets have lost trillions in value, with the Dow dropping about 1,000 points following these announcements. But beyond the headline numbers lies a more personal story. Let's cut through the political noise and examine what's really happening to your money and how these economic shifts will affect your household budget, your retirement savings, and your financial future. First, let's clarify what we're dealing with. A baseline 10% tax has been placed on virtually all imports to USA, with much higher rates on specific countries. 34% on Chinese goods, 20% on European products, 26% on imports from India, and 24% on Japanese items. Foreign-made vehicles now face a 25% tariff across the board. Many people have asked me, aren't tariffs just taxes on other countries? That's the common perception, but it misses a fundamental economic reality. When we impose tariffs, the immediate cost is passed directly to consumers and businesses. Think about it this way. If you own a restaurant and suddenly your food suppliers increase their prices by 20%, what happens? You either absorb that cost and reduce your profit margin, which most businesses simply cannot afford to do, or you pass that increase on to your customers. This isn't economic theory, it's business reality. As my grandfather used to say, the numbers always have to add up at the end of the day. But in this case, they add up on your receipts at the register. Let's make this tangible. Look around your home for a moment. Your smartphone, laptop, children's toys, furniture, kitchen appliances, even many of your groceries. A substantial portion of these items are imported from countries now facing significant tariffs. What does this mean practically? A family planning to purchase a $30,000 imported vehicle is now looking at an additional $7,500 in costs. That new refrigerator? Add 20 to 34% to the price tag. Even basics like clothing, shoes, and household goods will see price increases within weeks, not months. But the impact goes deeper than just higher prices. As consumer confidence falls in response to these changes, spending decreases across the board. Businesses seeing reduced sales typically cut back on expansion and hiring. This can trigger that economic downward spiral economists fear, where reduced spending leads to job cuts, which leads to even less spending. For those nearing retirement, there's another immediate concern. When markets lose value rapidly, retirement accounts take a direct hit. If you're decades from retirement, you have time to recover. But if you're planning to retire in the next few years, this volatility comes at the worst possible moment. We need to understand something fundamental about modern economies. They're interconnected in ways previous generations couldn't imagine. The smartphone in your pocket isn't just made in China. It contains components from dozens of countries, intellectual property from the US, raw materials from Africa, and assembly across Asia. This global supply chain evolved not because of politics, but because of economic efficiency. When each region specializes in what it does best, costs decrease and innovation increases. Disrupting these networks doesn't simply bring jobs back. It fundamentally alters complex systems that took decades to develop. Other nations are already responding. China has announced retaliatory measures on American goods, and the EU is considering similar actions. This creates a potential trade war, where each side escalates, and consumers everywhere pay the price. An auto industry executive explained to me that vehicles made in America contained parts from 14 different countries. If those parts suddenly cost 20 to 30% more, they face impossible choices about pricing, quality, or even continuing certain models. Manufacturing has evolved globally, not primarily because of tariffs, but because of technology, automation, and comparative advantage. Simply raising import costs doesn't address rebuilding American manufacturing and financing tax cuts. So what can you do to protect yourself and your family in this new economic reality? First, reconsider major purchases that might be affected by tariffs. If you need a new vehicle or major appliance in the next year, prices are likely to increase substantially. Either purchase sooner or be prepared to adjust your budget accordingly. Second, review your retirement and investment accounts. This isn't the time for panic selling. Historically, that's often the worst move during market volatility. Instead, ensure your portfolio is properly diversified and aligned with your time horizon. Those closer to retirement might want to speak with a financial advisor about protective strategies. Third, build additional flexibility into your household budget. The ripple effects of these economic changes will touch nearly every sector, so having extra financial cushion is prudent. Look for areas where you can reduce discretionary spending temporarily. Fourth, consider your career and income sources. Industries heavily dependent on imports may face significant challenges in the coming months. This might be a good time to diversify your skills or income streams if you work in potentially vulnerable sectors. Finally, stay informed but not overwhelmed. Economic changes, even significant ones, are part of the financial landscape. Those who navigate them successfully tend to be those who remain calm, make informed decisions, and avoid emotional financial reactions. As my mentor in economics once told me, the market rewards patience and punishes panic. That wisdom seems particularly relevant today. These economic shifts challenge us to reflect on our financial priorities and adaptability. While we can't control global trade policies, we can control our response to them. If you found this analysis helpful, please subscribe to Trendonomics and hit the notification bell. Next week, we'll be looking at specific industries most affected by these tariffs and strategies for investors in those sectors. I'd also love to hear your experiences. How are these economic changes affecting your financial plans? Share in the comments below, and I'll address the most common questions in our next video. This is Dr. Alexandra Morgan Smith with Economic Wisdom, helping you navigate the complex financial world with clarity and confidence. Thank you for watching.